So, good day, everybody. This is my very first video here on YouTube. I go by the name Brinda Muji, but my YouTube name, as you can see, is Hedge Funds. Well, the name is inspired by the hedge funds, those who govern the big money. So, this is my very first video, and I'm a forex trader. I've been trading now for about 6 years, and I would like to share a little bit of what I've been understanding in the Forex market throughout these years. And reason being, the Forex market currently in Africa, because I'm from Cameroon, is becoming a big deal. And many of us are getting into the Forex market with the hopes of making quick money, fast money, which is possible. But the truth behind this is without proper knowledge and understanding, really these dreams inattainable because we have mentors growing every day, but yet we still have an increasing rate of forex traders who are not successful in this market. So without wasting a lot of time, I'll dive directly into the video and what I'm about to talk about. But first, I'm going to give a disclaimer because whatever I think I say here, I will advise you not to take this as financial advice for investment. This is for educational purposes, and so I am not held responsible for any financial losses. So, with that said, let's dive directly into the video. So, many of us have been trading Forex for a couple of years, months, or maybe there are newbies, couple of weeks or days. I assume a lot of us maybe already know the basics about Forex trading and what it's all about. But there's something I really like us to talk about within this first video. And as you can see on my screen, the first is what Forex trading is and what Forex trading is not. And the second one we have is understanding the psychology behind Forex trading and what really governs the Forex market. So, what Forex trading is and what Forex trading is not. So, generally, we all believe that Forex trading is you put up the charts like what we have here. For example, you put up the charts. Let's take a pair which we commonly trade, say Euro USD. Euro USD. So people think when you come onto the charts and then you look up your screen, you draw a couple of lines, support, resistance. Excuse me, let me take off these lines here on my machine. Yeah. So many people think it's just all about drawing, when you draw the lines, you see support and resistance, and then you go about trading, all the basic things we know. When you see the market making higher highs and higher lows, you believe the market is shifting structure and so on and so forth, support, resistance, uh, you know, people trading ICT, I'm not against any strategy, but I'll soon get to the point of what I'm trying to say, support, resistance, yeah, you can see previous structure broken, retest, break of structure, retest, and so on and so forth. So what I really want us to look at here is if truly these things really work the way we think they do. I really want us to think out of the box. I mean, I want us to look at this thing really. If it was that easy to trade Forex, drawing lines, support and resistance, and then click buy or click sell, I mean, then the percentages or the percentage of people making losses in Forex would rather be the percentage of people making profits. That is, more than 90% plus of people keep failing in Forex every year. Even though we have people coming up with success stories in the Forex market, but yet the failure rates keep increasing. Is it that the mentors are not doing the work? I'll probably say not really, but because people are not really wanting to put in the work the way it is required. Now, don't get me wrong, there are a lot of strategies outside there, you know. Shout out to the big Forex traders, which we know them, you know. I'm an African too from Cameroon. Of course, I know of Kojo Forex, Happy Forex, Jeffrey Benson, Ref Wayne from South Africa, Lani from South Africa, you know, Forex Broker Killer, Jason Noah, you know, I can name so many. And you know, we have had a lot of success stories from these guys, and they have a lot of people which they mentor. But truth be told, obviously, there are people who are succeeding, and there are some who are not. And it's not because those people may not be teaching well. Well, I'm not in the academy, I don't really know how it goes, but I believe there is a lot of work to be done. And once you can't put in the work, I bet you, no matter the strategy you have, you won't really succeed. So what Forex trading is? Now, the truth is, let us observe it quite all right. What are the factors that really govern the Forex market? Let me go to my daily charts and let's look at something. Now, this is a daily chart of Euro USD. And yeah, we can see Euro USD has been making, you know, some downward trend moves, you know, but generally we have been in an up move. But right here, we have been seeing some downward trend, you know, break of structure, buys, 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 and this is where we are currently in the market. Now, do we think it is the order blocks or the fair value gaps or the ICT order blocks or the breaker blocks? Are those things really what move the market? That is not what really moved the market. Yes, from my own point of view, that is not what really moves the market. I believe what causes us to be able to see the market the way we see them is because if you look thoroughly, if you see the order blocks that are being respected and the breaker blocks that are being respected and the fair value gaps that are being respected, where we have power moves in the market, there is something influencing the market. And these things are based on fundamental factors. So when I talk of fundamental factors, we'll need to go back to micro or macroeconomics, what we studied in school, or for those people that did business studies in the university. For those who did not go to the university, we understand basic trading knowledge too. So what really influence things? Now, price does not necessarily mean as the market keeps going higher, it means we will keep buying this market, or it means the market is on an uptrend. Or the fact that price keeps going lower, it means this market is selling or we are in a downtrend continuously. No, that is why we have pullbacks, but that doesn't necessarily mean we're in a downtrend. Now, there's what we call value and pricing. In economics, we study, or in our daily business lives, what happens when a company has the ground, or when an enterprise has the ground where he has better products than the other company, what happens? The value of the product of that company goes up. And when value, and when value, and when value, let me get that written on the screen, value and uh price. So we have value and we have price. So we have value and price. Now what happens? When value increases, what happens to price? Therefore, price who does what? Price increases. And now what happens? When value decreases, what happens to price? Price decreases. Now, in America, for example, if right now they were to announce that let's say like the crisis which happened in America, you know, the bombing of the business center, what happened to the dollar? The value of dollar dropped drastically. And what happened to the price? The price dropped. Now, what causes one pair to go up and another pair to go down? If, for example, we take euro US dollar, what is happening now to the euro against the dollar? Now we know the euro is the base pair here and the dollar is the quote pair, meaning we are respecting what is ahead, the first currency ahead. Here we have euro USD. Now, euro USD, we seeing euro USD rising doesn't necessarily mean that it's because there was a break of structure. Now, When you trade in context, that is when I believe your technicals are going to give you an advantage in the market. Now, understanding fundamentals and correlating it with the charts is what is going to give you an advantage over other traders rather than trading blindly, because there's always break of structure. And sometimes you see a break of structure. Let's say the market was trending in the downward direction, and then suddenly you see a break of structure, and then you still see the market maybe do something like this, goes up, and then you start thinking it's creating higher highs, higher lows, and what happens? You see the market suddenly turn against you, and it keeps on going down with the lower lows, lower highs. Now, when you trade in context, what does that mean? If the fundamental factors, that is, things that happen in the country, such as maybe the political events, the economic events, the inflation rates, the interest rates, and labor, and so on and so forth, certain things that can influence the movement of the currency, that is the fluctuation of the price or value of a currency up or down, those are the main things we focus on. When we get to understand what those things are doing, we will be able to correlate those actions with certain patterns on our charts in order to have a clear direction of where the market is headed. Now, for example, here we have something like a cone wedge, and then we have something here like a breakout, and then you see suddenly there was a change in the direction of the market, moving upward from this area. Now, do we think, or do you guys think it's because of the wedge that occurred here, and then suddenly we had the breakout? It means we were supposed to buy? No. If you go back, I won't do this homework for you. Bear me, please. So just go back and do your homework. You have Forex Factory, you have other news calendar which you can check. You have what we call Trading Economics. That is a good website where you can also check off your news events if you are a trader. That is Trading Economics. Trading Economics.com. That is a website you can check off if you're also a trader, similar to Forex Factory, where we check fundamental news events, what is about to happen, or to check past news events. You can read up other stuff there, such as interest rates or certain things that govern the country, so on and so forth. So what our advice is, when you see a market trending downwards and you start seeing certain movements that are indicating that we may have a change, you start seeing certain patterns, such as the W formation from the bottom, indicating that we will start moving upward, or you see the M formation from the top, indicating that we may start reversing, or you see the ascending wedge, the descending wedge, and so on and so forth, the bull flag, the bear flag. Before the continuation, if you check along those times, let me say if you're trading from a higher time frame, say from daily, because this is a daily chart. Now, if you check from this moment of these reversals, if you go along and check maybe the news events that occurred around these times, before this explosive moves to the upside, you will realize something was happening to the European economy and something was happening to the US economy. Now, when you start realizing that you need to merge your technicals with context, it's going to give you a great advantage to what you are actually trading. Because without context, then we don't even know what we are doing. So what I'm trying to say is, if the economy, if the US economy is doing well, what is going to happen to the dollar? The value of the dollar will keep increasing. And then what is going to happen to the price? The price of the dollar will keep increasing. And if maybe the euro is having a bad economy, or something is happening that causes the European economy to move, maybe, I mean, we use the euro in France and other the European Union. When the euro is facing crisis, what happens? or the European Union is facing crisis, or these countries that use the euro, what happens? The euro drops, and it means that the euro is losing value, and therefore price drops. For a market to be bullish, say you're trading euro USD as we have now, what does that mean? It means the euro is strong and the dollar is weak. So what does that mean? Investors are moving their money from the US economy, and they are investing more of their money in the European economy. That is what is going on. And if you see, say, GBP USD too, for example, we look at GBP USD. For example, if we are looking at GBP USD, here is a daily chart, and you see the GBP currently is moving in an option. What does that mean? That therefore means the pound or Great Britain is doing good, and what is happening now to the US economy is actually doing bad. So for you to be able to trade an uptrend, one pair or one currency needs to be good and the other is bad for that trend to move up, meaning there are more investments going on in the British economy than the US dollar economy within this particular period of time. And when you see the other way around, you see the pound falling. That means at this period of time, the pound was doing very badly compared to the US dollar or compared to the US economy. And those factors that influence these movements are not what we call the price action. They are not what we call the price action. Is what we call the fundamentals affecting this economy, these economies. So what we are looking at here is not just about price or just about the technical analysis. It's not because we broke structure here, that is why we have a sell to the downside. If you go and you check out in between, let's say 16th of August 2023, we are looking at pound, and to maybe around the 31st of August, you're going to see that something probably happened around here that caused this market to start shifting structure to the downside so strongly. And if you look at what happened in the US economy, something actually happened in an opposite direction that pushed maybe the market to start buying. Now, before you start trading, you don't just go in and picking any pair and just decide to trade. You just wake up and say, maybe my best pair is Euro USD or GBP USD or USD JPY or USD CHF. Actually, I don't discourage anybody who says he has the best pair, but I would really like you to look at this thing from my own point of view. If you are trading and let's say the New Zealand dollar, let's say the New Zealand economy, let's say the New Zealand economy, let me write down. Let's say the NZD is the New Zealand dollars, or the New Zealand economy is doing well. And then let's say you take a US dollar too, and then you take the USD, or the US economy too is doing good. Do you really think NZD USD is going to be a good pair to trade? I would like us to answer that question in our hearts. If NZD is strong and the US dollar is strong, do you think NZD USD will be a good pair to trade? No. We are actually going to see what we call consolidations. That is what causes what we call the consolidations in the market. We start seeing consolidations within the market. This is it. We start seeing consolidations within the market. And if we start seeing the NZD being weak and the US dollar being weak, and you want to trade the NZD, it would also be practically impossible, because, or not that it isn't possible, you might see large range which are also tradable. But to my point of view, I believe we are all investors and we don't just trade based on luck. Of course, there are various strategies. There are people who trade the ranging markets, no doubt, especially if you know what you're doing. But generally, I want us to look at this thing like the way smart money looks at this. Do you think this will be a great area to trade? No, The NZD is weak, the USD is weak, it's going to be consolidating. Therefore, that wouldn't be a good pair to trade. So instead, how do we try to solve this problem? How do we try to solve this problem? That is where I actually take you now to the second, understanding the psychology behind Forex trading and what really governs the Forex market. Of course, I've briefed a few of these things here of what Forex trading is and what Forex trading is not. Forex trading is all about understanding the fundamental factors that govern the economy and trying to see how those factors affect the value and the price in an economy. And what Forex trading is not. Forex trading is not drawing the support and resistance or trading solely based on technicals, thinking that technicals are the things that move the market. Granted, there are people who are consistent with the technicals because what we see on the technicals are the things that are being reflected from what happens in the fundamentals, meaning when you see a change in the move or a change in the direction of the currency being in an upward direction or a downward direction, that therefore means something happened in the economy that triggered the change of the price or the value of the currency. So that is what happens. And then going down to understanding the psychology behind Forex trading and what really governs the Forex market. Now, this is why I take this thing in depth. Looking at understanding the psychology, let's take this simple example. When we wake up in the morning, on Mondays. What happened on Mondays? On Mondays, Monday, Monday is practically a day which I believe in the whole world, even here in Cameroon or everywhere in the world, Monday is a day which we all prepare ourselves on Sunday. We try to have enough rest. We try to wake up on Monday being strong to begin the week. I believe there's this saying in my country, and I don't know if it applies to so many other countries and maybe abroad, wherever you are. Monday is a day which we basically try to begin in a positive way because we believe that Monday is a day that governs how we are going to run the rest of the week. I believe that's how the thinking is in so many areas of the world. So we try to make sure that we begin the week in a very smooth and nice way. So especially on Mondays, during the whole week, if we notice really Mondays are like the busiest days within the week because we wake up in the morning. Mondays, children go to school, everybody's trying to be sharp, people are trying to rush to work, people are trying to put things together. There's a lot of psychological hills, like people are moving left and right, people are trying to, that is, the city is really in movement, people are fast, everybody is trying to start a great week, try to make the business run, and so on and so forth. So what is the psychology of Monday? The psychology of Monday is rush hour. Everybody's rushing, everybody's trying to put things in order. And then we start seeing Tuesday, Wednesday, we start seeing people trying now to calm down and try to put things together because they've tried to see how Monday, Tuesday, they can adjust their timetable or adjust their programs of how they are going to run the week. So Monday, Tuesdays are some of the busiest days within the week. Now, that is something I really wanted us to look at before diving into understanding the psychology, which I'm talking of Monday, behind Forex trading, and what really governs the Forex market. So why Monday? Monday is very important because it is the beginning of the week or the beginning of a trading week or the beginning of the activities of the week. And we also have Friday. Why is Friday too really important? Of course, Friday is the last really like one of the busiest days too within the week because we are finally getting close to the weekend and everybody is foreseeing how, wow, I'm going to have a good rest on Saturday and Sunday. So that is also a day for final touches, trying to round up activities both in offices, in the banks, petty businesses, and so on and so forth. Friday is a day to round up, a day to finalize things, and to get the rest. So Mondays and Fridays are really important. So looking at this and of looking at how these days run in our daily lives, it can give us a peek into how or a peep into how these markets can actually be functioning. Now, going in depth into the psychology, we were talking about the uh, uh, um, we're talking about say NZD USD about NZD getting weak, USD getting weak, it wouldn't be good to trade because they will both be consolidating, or that pair will be consolidating. And then we spoke of it being strong and NZD being strong and USD being strong, saying they might not be the best because we are going to be observing more of consolidations. So how do we know which pairs to trade, and how do we choose the pairs? Granted that we have so many pairs, we have 25 plus pairs which people trade on a regular, not to talk about the exotic pairs which also have low spreads on certain brokers, which people also trade, a part of the major pairs which people trade: Euro USD, GBP USD, NZD USD, Aussie USD, USD JPY, USD CHF, and USD CAD. Those 8 major pairs. So we have all the other pairs which people trade. We have the minor pairs too. After those major pairs, we have the minor pairs: Euro JPY, GBP JPY, GBP NZD, Euro NZD, Euro CAD. So it would rather be a bore and a stress to open each pair and start analyzing them and trying to come up with technical analysis to obviously know how we are going to trade. But what if I told you people that there are better ways of how to approach this market, and to even know before the market opens which pairs are going to be profitable within the week? So that is where I dive into the psychology behind Forex trading and what really governs the Forex market. Now we're talking about fundamental factors influencing the Forex market and how we blend it with the technicals. So I have here in my watch list, you can see this N stands for the NZD index. I have the US dollar index, the JPY index, the Aussie index, the CAD index, the CHF index, and the Euro index. What are these indexes? Of course, I'm sure most of you already know of the US dollar index. That is, most people use the XY, a measure of an average of the US dollar against all other currencies. So an index is like, if you say maybe the NZD index, as you can see on my screen here, you see NZD USD, NZD Euro, NZD GBP, NZD CHF, NZD JPY, NZD CAD, and NZD AUD. So this index is like the average of the New Zealand dollar currency against all the other major currency: Euro, GBP, CHF, JPY, CAD, and Aussie. So you take the New Zealand dollars and you measure it on an average of 50 against all the other pairs with same weighted index of 50, 50, 50 against all other pairs, to actually have a weighted average, or to have a reflection of a measure of the New Zealand strength against all the other currencies. So what I do is I have an average of all the NZD against all the other pairs. I have an average of US dollar against all other pairs. I have an average of the JPY currency against all other pairs, as well as the Aussie, the CAD, the CHF, and the Euro, as you can see on my screen. So what I do is I look at these indexes. So all I need to do is look at this 1, 2, 3, 4, 5, 6, 7 currency indexes. And from there, 8 currency indexes, because this is the GBP too. Sorry about that. We have 1, 2, 3, 4, 5, 6, 7, and 8. So because we have 8 majors, so of course, those combinations, we have 8 various currencies, so an 8 indexes. So I have the NZD, USD, JPY, AUD, CAD, CHF, Euro, and the GBP. So what I simply do is, for example, let's dive into the GBP index. Good. So right here, I have the GBP index. So here, what you see on my chart basically is the GBP index, that is GBP against all other currencies, all other major currencies. So right here, for example, here we have GBP. I will not go into the details of the insights in this video into how I do the analysis to get into this. I just want us to get like a basic idea of what I've been talking about, understanding the fundamental factors and the technicals, and trying to merge it to see how these things work. So here we have the zone, of course. Here we have GBP index, GBP, that's the pound against all the other currencies like we said initially. You see this W formation from the low. Here we have the pound getting stronger. So the pound against all the other currencies, you see the pound is getting stronger. So what do I do now? I need to look for another index that is giving me a vibe showing me that it is about to do the opposite. So if the pound is showing me like a sign that it is about to be strong, I need to look for another index that is showing me a sign to be weak, so that with that I can pair both currencies, and from there I can know that, okay, if the pound index, for example, is buying and the JPY index, for example, is selling, what is going to happen to GBP JPY? Of course, GBP JPY is going to be bullish. So right here we have, now we have the GBP, which is strong, and right here we have the JPY, which is doing the direct opposite right here. We can see the JPY index. You can see we have some highs here. You see the M formation, and then we have this drop coming in. So I'll dive in another video. I'll dive into what are the aspects I was looking at here to give me a confirmation that this will sell, and the other one to explain why the GBP was buying. But for now, I just want us to get the logic of how these indexes work. So here we have the JPY index. We see these highs, we see the M formation, we see it selling. We have Tuesday, 2nd January, we have 3rd January, and then we see this currency practically dying off from the 3rd January. So I go to the GBP index. I go to the GBP index, and what is the GBP index doing? The GBP index is doing quite the opposite too. From the 3rd of January, we saw strong bullish candle and we saw it going up. So what do you think is going to be a good combination? GBP, JPY. So GBP, JPY to me will be a very, very good pair to practically buy, because observing it from the lows, we can see that GBP is practically bullish and JPY is practically bearish. So let us observe that on the chart and try to confirm and see if these two are correlating with the pair. So we are going to look at that right away and then know what is about to happen or what is going on with GBP JPY. So I'm just going to go into it right away, GBP JPY, and see what is happening with GBP JPY. So yeah, right here we have daily. Remember, we have been looking at the charts strictly on daily. This is GBP JPY, and what do we see GBP JPY doing? We see GBP JPY buying off from the lows. I take this off so we can really observe what is going on. So right here, this is GBP JPY. And what is happening with GBP JPY? Since the GBP index is what? Bullish, and the JPY index is bearish, what do we have? A good combination, which is going to be GBP JPY. So what I'm trying to say is, this is what we call economic divergence. That is, one economy is getting strong, another economy is getting weak. You put the two together and you have a very good pair to trade, which will be GBP JPY. And if we go down, if we go to GBP JPY, we go down to maybe the 1 hour time frame. You see from that zone which we draw, GBP JPY has practically moved about close to 500 pips and counting. So these are the ways you can catch really, really good trades. And now let's look at other examples. We are still with the GBP. We have GBP. We have the GBP index. Let's go to the GBP index. This is the GBP index. Remember, I'm on daily. Sorry, the index I have here for these various currencies, I got them somewhere. If you're interested, in case, you can comment in the comment section below, and I'm going to post them, or I'm going to send you a few links and you can download them, copy, paste it in your trading view right here, and then you have it, and then you can quickly save it. I'm going to show you the process of how you can get it and save it. I'll leave that for another time. But right now, I just want us to get the sense of what I'm trying to talk about. Economic divergence. One economy doing well, another one is not doing well. You take the two, you combine, and you have a very strong pair to trade. Rather than taking a pair, you don't know what is happening in the pound. You don't even know if the pound is having a good economy right now and it's moving upward. You take the euro, you don't even know if the euro is having a good economy and moving upward, and you try to merge euro GBP and try to trade, and then suddenly you see the market going up, suddenly it reverses, hits your stop loss, goes up, hits your stop loss, suddenly you say, oh no, it's giving me an ascending wedge. I think it's buying, you buy, suddenly after maybe 15 pips move in your direction, it suddenly reverses and you start doubting, what am I not doing right? Your technical analysis are quite good, but it is not in confluence with what the economy is doing. And once your technicals are not in confluence with what is happening with the economy, you are trading bullshit, because no matter how good your technicals will be, your other blocks, your breaker blocks, your ICT concepts, smart money concepts, or whatever strategy you use, it is not going to make sense because it is not in correlation with what the economy is saying. If the fundamental says yes and your technical says no, you will definitely be wrong, because the technicals correlating with the fundamentals is what is going to guide you towards the direction of the market which you're looking forward. You don't just buy because you see the uptrend, or you don't just sell because you see the downtrend. You buy and you sell based on how the economies are behaving in confluence or in differences with each other. So looking at this, is we are still with the GBP index, which this is it. And then let's go to the JPY index and try to see what else we can use. So we have the pound, which is strong. Let's try to look for a weak currency, a weak index right here. Let's take say the CAD in the know that's the CHF. Let's take say the CAD index and see how the CAD index. So right here we have the CAD index. So right here I have the CAD index, and you can see from the third, I don't think this would be a good example. I really like to use a really good example of a pair which has doing good. Right here we have the Aussie. We have the Aussie. So I was observing the Aussie and I saw something happening here. I drew this. Of course, this was showing buys, but right here I saw some correlations with the GBP. The GBP was about getting stronger. Like I said, this was the third of January. This is daily chart going back to AUD USD on daily too. If you watch out here, second, this is the 3rd of January. I was seeing some bearish signals, and you see we have some down moves right here on AUD. You see, doing the opposite of what GBP is doing. While the GBP is buying, you see the AUD is selling. So how do we trade this? Obviously, if you want to trade this, GBP AUD will be bullish, because GBP is the base pair, and AUD is the quote pair. So we follow the pair which is in front. We follow the currency which is ahead, which is the GBP. So that therefore means GBP is going to be bullish, and therefore we are going to be buying GBP against the AUD, meaning something is happening in Britain or in Great Britain causing the pound to be stronger, and something is happening in Australia causing it to be slightly weaker or weaker than the pound. And so if we go now and decide to look at GBP AUD, what happens? We are going to see that the GBP AUD2, I'm going to go down to daily. I'm going to take off. So when we look at this, what do we observe? We can see that right here, the GBP AUD has been, and if you look right here, you see this is the 3rd of January. You see that strong push to the upside, and we have that buys coming in on GBP AUD. And if we go down to 4 hours, What do we have on 4 hours? You see, this is what we have on GBP AUD. GBP AUD has been buying to the upward direction, which we can see on this chart right now. So GBP AUD has moved about 394 pips, or let's say 400 pips on the dot ish, and we've retraced back to about 344, or let's just say 345 pips and counting. 244.9, let's just say 344.9, let's just say 500 pips or so, 400 pips, 360, yeah, from the lows actually to currently where we are, 356 or 58 or so. So that is what we have for GBP AUD. And so one currency needs to be strong. One currency needs to be strong, and another currency needs to be weak. That is how we have a good trade for sales and another good trade for buys. Now let's take another example. Let us look at let us look at the US dollar, the US index. This is the US index right now. That is the US dollar against all the other 7 major currencies. So here we have the USD against euro and so on and so forth. This is what we have. You see, USD has been selling ever since from these highs. So we had sales coming in from here, right here from these highs from around the 1st of November, and it has just been tanking to the downside. And right here on, let's take for example AUD, contrary to the US, let's say from the 31st, let us see AUD from, what was that, the 31st of or the 1st of November, 1st of November, AUD, October 6th, 2nd, 31st, yeah, from the 1st of November right here. And then here we started having from the 13th of November, we started seeing some real moves getting into the market. Contrary to US, from the 13th, now from the 14th candle, you see that drop, and then suddenly the downward movement. And then on AUD, you see 13 and then 14, you see that push up and suddenly the upward movement. So you see an opposite of what it has been doing. You see here, right here, we have that W formation from the lows on the AUD index. And on the US dollar index, we have that M formation from the highs. So this is another example of economic divergence. So what do you think is going to be happening to AUD USD? Of course, you guessed right. AUD about to buy, USD about to sell. That therefore means AUD USD is going to be a good buy market. That was as of the 10th or the 13th of November. So going into it, let us check that out. AUD USD. So AUD USD. What do we have here? Good. As of the 1st of or the 13th, yeah, 13 and then 14, suddenly that push to the upside. You see, this is AUD USD. This is what we had. You see that push to the upside. Let us go down to the 4 hours chart and see. You see, this is where the reversal started. You had that pullback, and then from the 14th, you see, I believe this was a fundamental event. So why do you think this market started buying? This fundamental event was a catalyst for this market to start moving to the upside, and that was Tuesday. I believe there was an economical news event. Please, you check that out, but I'm pretty sure there was a news that influenced maybe that move to the upside. So we had this two bullish candles, these strong moves, and then suddenly the market kept going upward from the 14th of November. So the US dollar was dropping and the Australian dollars was climbing. Something was happening maybe in the US economy, causing the markets to fall. And something was happening in the AUD economy, causing it to gain value. So the US dollar was losing strength, while the AUD, the Australian dollars was, or the Aussie was gaining strength. So a lot of things are happening in the market. And please, guys, let us try as much as possible to try and look at some of the fundamental things. Let us go back to our basic economics, secondary school, high school. Basic economics. What are the factors that influence, or what is foreign exchange? Foreign exchange is all about exchanging one currency for another. So if I'm going to Nigeria, I'm going to exchange my money to the naira so that I can be able to purchase in Nigeria. Sometimes we are in Cameroon, you have somebody in the States. Here in Cameroon, $1 is approximately about $580 right now. I mean 580 francs right now. So let's just take it to a round figure which we can calculate. If somebody sends you $1, let's say it's 500 francs. Somebody can send you $1, can send you, let's say, $200 via, or $100 via Western Union. You receive it right now, and let's say $100 times 500, that's 50,000 francs in our currency. And maybe 2 hours later, he sent you that same $100. Maybe you might receive 49,850 francs. Just within an hour, there was a change, there was a fluctuation. So that is what we call the exchange. Either you can gain or you can lose. So the speculation, in order to understand when to trade so that you can keep having that edge of always having a higher currency each time you exchange, is that edge which helps you to have an advantage over the market. And that is why we speculate in the markets. So let us avoid getting into the Forex market with this notion of wanting to guess or just drawing support and resistance lines and thinking that with that we are going to keep making money in the Forex market. If not, I bet you more than 90% of people would have been so successful in the Forex market. That is why I respect the few who really have made it. Bear with me, I'm 6 years into this. I'm not really saying I'm a millionaire or so much or into all this financial freedom stuff. And so no, I'm not yet at that level. But I'm encouraging all of us to really take time, sit down, because even after all the programs and the mentorship and so on, if you don't sit down and put in the work, this isn't a field for you. This isn't about drawing lines and trading other blocks and thinking that you make money. If it was that easy, everybody would have been making money in the Forex market. So we need to put in the work. In the coming videos, we are going to talk more about fundamentals and trying to see how we can merge it with the technicals and so on. And this is my very first video. With this knowledge I've dropped, I hope we all get to learn and we get to see how we can make things move forward with the channel. If you love my channel, please like, subscribe for more videos, and please tell me what more you want in the comment section below. And if you enjoyed this video, please give a thumbs up so that I can keep posting more, because your views and your likes and your comments are what pushes me to keep on making better videos and with better qualities in the future. So on before I round up, I just want to drop in this last bomb. Remember back in the days, we used to trade metals, right? Our ancestors or our forefathers back in the days, gold was very important, gold, silver. So remember, gold was like a value of exchange when currency is failing. Say, for example, many people are purchasing gold because gold is believed to have a value which does not depreciate or appreciate as fast as how the value of the paper money is. That is, the currencies we use, be it the US dollar, the Australian dollar, the New Zealand dollars, or the currencies which are currently available in your countries, wheresoever you are. So when the US dollar, for example, keeps going up, what happens to gold? The value of gold, it drops. And that is why when you see the US dollar, the value of the US dollar increasing, many people exchange their gold into the dollars in order to have more money. And when the dollar is losing its value, what do people do? They quickly secure the value of what they have in the form of gold because gold is something which is valued, and in the long term, it will always be needed, as compared maybe to currencies which quickly appreciate and depreciate in less than no time. I will talk more on that in our next video. Just wanted to make a light on that. And that is why you see when the gold is going up, the dollars goes down, and when the dollar is going up, the goes down, the gold is going up. So with that, I'm going to round up. Follow me on Facebook as hedge funds and on IG as hedge_funds with a 4UNDZ on IG, and on Facebook hedge funds with an FUNDZ. So thank you for watching and see you next time. Peace out.